Yo, what's going on, everyone? It's Chase. So today we will talk about Bitcoin. We'll talk about ES. We had CPI today as well. Came in a little bit hot, but nothing crazy. Really, I think the important event moving forward to watch for is the FOMC meeting minutes. You'll see that denoted here in the blue line, vertical. That'll be on the 22nd. The reason that's important, I had it written down in my notes that Powell talked about that they may give guidance as to what a pause in rate hikes would look like during the minutes. Okay, so I have that denoted in blue on both of my charts, on ES here and on Bitcoin. Okay, so now just breaking these charts down real quick. We've done this sort of multiple times now, but I'll do it again real quick. Weekly resistance, okay, right here we had that. Look, you can see the levels here. Resistance, it comes over. Resistance, 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 break down here, resistance there. Okay, weekly resistance, we can just denote that with a W. And then if we move down to a lower time frame here on the daily, well, daily's still a high time frame, but lower than the weekly. If we move down to the daily time frame, in my opinion, where's the liquidity? That's often a question of mine is, where is the liquidity resting? And I'm seeing that below here. So I think that you'll have a lot of people, anyone who got long all in here, stop losses are below here. If a big player wants to get their bids filled, what's the best way to do that? The best way to do that is to run liquidity. When you run liquidity here, their stop losses get triggered. That turns them into forced sellers. And when they're forced sellers, it gets eaten up by your whales, whatever you want to say. They have all their bids in there, their limit bids. It gets all eat up, and then that's when you get your strong reversal. Okay, so this is the major level I'm looking at still for longs. As far as shorts go, so this is my level for longs. We keep an eye for a deviation of this level. If this comes around the minutes, it's possible that things could line up in there. Like I said, we can see a deviation below here, and that's where I'm looking for long position. Okay, when it comes to shorts, it's pretty simple, right? We can see that throughout this consolidation, we had support here, support, blah, blah, blah. I don't want to go through the whole thing. So you could sort of just mark this out. You don't need to go crazy with, I think that's a big thing people do is they try to get the absolute perfect level or the absolute perfect this or that. You guys got to understand that sometimes you're going to catch a trade and sometimes you're not. I've had many days, in fact every day probably, where I have a great idea and I get front run by a couple of ticks or something, a couple handles, a couple points, dollars, whatever you want to say. I've been front run thousands of times, and it's going to happen thousands of more times. One of the biggest things is you need to not have that FOMO kick in. And if you're not at the point in your trading career, quote unquote, to where, because I know some of you are just starting out or some of you only take it as a part-time thing, but if you're not at the point in your career where you can't really disconnect from missed opportunities, if you need to get it back or something of that nature, then you got to grow out of that, because that's just not going to be good for you at all. Okay, so mark this out however you want. If we wanted to, we could take the low, and we could take the high right here of this candle. That's fine. You could also just, take a horizontal line. You can mark it out here. Why is it not? There we go. And you could see, you could go off candle closes, although I typically go off of just the general area. So I would say, look at all this here. Support, support, support. Pretty perfect taps there. And then big impulse down through. Okay. That's something you always got to keep an eye on too. And what's the significance of an impulse down through? Well, the significance is that a lot of the people who were long, or a lot of the people that were buyers, they didn't get a chance to get out when you have a strong impulse like this. That is why when price came back up here, look at this. Even your lowest buyers, they look to get out at break even. So they bought here, strong impulse down, possibly while they were sleeping. Maybe they went to take a piss and there was a strong impulse down, whatever you want to say. But when you have such a fast move, quick move down, when price returns to it and there was prior support there, that typically turns into resistance. Okay, so hopefully that's helpful in identifying, what to do with these impulses. A lot of my trading is based around, these major breakdowns, these break-in market structures, and I feel like my Twitter feed and the replies are definitely starting to understand this a lot better. So hopefully, I think my teaching is working to a degree. Thanks for all the kind response, constructive criticism, whatever you want to say. But yeah, it seems to be going good. Let me take a sip of water. So you're going to wonder, oh, well, are you already short? No, I'm not. Didn't get an entry here. This just occurred too fast for me. And it didn't really give me any, like, where's like a break-in market structure here or anything that's clean. And, what I want to see, if we're going to move up into here, and test all this supply area, I want to see us push up into here a bit more, closer towards the equilibrium of this area. I want to see us push into here a bit more, make a high here and then a higher high. I explain this often too. And then when you get your breakdown there and you say, oh, break in market structure, return to the break, and that's when you can start finding your entry. You can look for entry here, stop here. Additionally, if you miss this entry, you can start to look for entries along the down move, but you don't want to, overextend yourself too much, right? When you overextend yourself too much, that's when you get a squeeze and it goes in the other direction, okay? So it's really just all about making sure that you're not, if you're a beginner trader, like really beginner, your best bet is probably just to go into the daily or something and say, hey, let me just clear all this off real quick besides the vertical. I think your best bet as a daily trader would just be to say, hey, look, here was here's some clean daily closes right here, support here as well, breakdown through, short this on limit order, stop loss above here, play it to liquidity. Okay, I think that is something simple for a beginner trader that you may come out with, 40 or 50% win rate, and if you're able to capture, let's say 1.5 to 3 risk reward, you can come out of that profitable. Okay, because I understand that the whole entry technique thing is not in everyone's wheelhouse just yet. You will eventually get good enough to do it. I showed you guys a trade on ES yesterday or 2 days ago. Actually, I think I hit winning ES trades live on the feed 2 days in a row now. Trying to figure out where it was. I don't even really remember. Yeah, I don't remember. It was some type of range trade. I think it was in here. But the point is that the entry techniques are going to be variable, and they're based off of sweeps of liquidity. They're based off of market structure breaks, and this is for me. Sweeps of liquidity, breaks in or market structure breaks. I can't talk. What else? Like a range deviation, right? So you have a range here, something like this. You come down. This was the trade from the other day. You come down, you tap the range low, you deviate outside the range low, you come back in, there's your retest, you play it to the other side of the range. Okay, there's your entry, there's your stop, there's your target right there. Okay, so trades of that nature are typically what I'm aiming for. But at the same time, if there's just a clear, like daily or weekly level or liquidity to look at, want ES here. Like, look at this, just weekly liquidity. Sweep, perfect sweep, and rejection, okay? So there's multiple ways to engage in the market. Some are going to be easier, so to say, quote unquote, but you're sort of risking it a bit more. Like I said, when you're just leaving these limit orders and you're not looking for entry techniques and whatnot, you're accepting a bit more risk. But at the same time, you should typically be able to get decent risk reward off of those. Go to my link tree in my Twitter bio, and it's called How to Enter a Trade. Okay, it says, and that covers your limit orders versus your entry techniques, etc. Okay. All right. So thought process moving forward. ES. Did I finish Bitcoin? Yeah, I mostly finished Bitcoin, right? I said we had weekly resistance, breakdown, look for moves into here for potential short, look for longs below this swing low, look for a deviation below there, and that could potentially get us long. Now, oh yeah, one more thing I did want to cover. When I'm talking about entries on swing lows, the target needs to stay intact in order for that entry to still be quality. Okay, here's what I mean. When we were legging up here, and I wanted to see us push into weekly resistance, let's just mark that out again real quick. When we were legging here, I said that I want to see a sweep of liquidity and play it up towards weekly resistance. Okay, we never got that. We never got the sweep. We just put in more lows, more lows, more lows. This sweep was no longer good, and I said that. Go check my Twitter feed, and I specifically actually described the whole entire thing. I said that when Bitcoin does not sweep and it leaves these lows untapped for weeks on end, that typically price simply just cuts through it and it goes lower. Okay? So that's something to keep an eye on too, or to add to your overall thought process, is that if you're not getting the swing when you want it and target has already been hit, the swing is no longer good. Okay? So if we go and just start running all this up and we go take this liquidity or something of that nature, I'm not going to bid this anymore when we come back down into here, because we've already taken liquidity. We're going to go towards liquidity. Okay, that would be like your target right there, but I have no idea anymore what it's going to do, because I don't have a target anymore. But now if it comes down into here, if it comes down from here, or let's say it goes a little bit higher, breaks down, you get a sweep, or you get your rejection there like we talked about before. You come into here, you sweep this low. Well, now we can play it up towards maybe this liquidity, or we could play it up towards this liquidity, or we could simply just play it up back to resistance, TP1, TP2, TP3, something of that nature, right? And typically, people ask me that a lot too. What typically are your profit taking? I would do like, and this is something too, your TP1 is often your best take profit, funny enough. A lot of people always do TP1, 2, 3, and oftentimes many of them will hit. SZ is a good example. I see him hit his TP1, 2, 3s all the time. But, a lot of the time I think TP2 and TP3 are people really just looking or hoping for more gains than they should be really wanting, right? TP1 is usually your best TP. I usually take at least 60 on TP1, 60% of position size, and then maybe like 20 here and 20 more here. Okay, so that's how I typically trade TP1, 2, 3, or if it's just TP1, 2, I'll do like 70, 30, something of that nature. Okay, trying to give you guys, I know this video is a little different than my usual ones. I'm trying to give you guys a bit more insight into my, sort of trading techniques, etc., and how I'm executing on the market. Okay, so hopefully that's helpful. Moving on to ES, sweep liquidity. Okay, we come back down. This was your resistance before the move up. Okay, it's pretty simple. You had consolidation in here. This was your resistance right here. You moved up through resistance. When you moved up quickly through this resistance, you found support, support, support. Just as in the opposite direction with Bitcoin, when we quickly moved down, you came up and you found resistance. So you quickly moved up, you came down and you found support. Now, it wasn't completely precise. It pushed through a little bit, of course, but if you were just trading off of the daily chart, support, 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 your daily closes were always clean. You were never invalidated off the daily close. And that moved you up. Now, we're getting some movement in here right now. I see this as your demand right here, essentially. But also keep in mind that you can have liquidity below this low, okay? If it breaks back down into here and it really starts consolidating in here, a retest of this level right here most likely sends us down to this liquidity. I look for that as a potential. But also keep in mind, when there's a lot of velocity all in one candle, when it's all in one move, I find myself again, I'm getting into my trading execution here and what I look for in the market. When I see a major move, right? So let's say this candle goes all the way into here today. I'm not shorting this right away. This is too big of a move down. I'm not going to be shorting the bottom of a candle. what I'm going to do is I'm going to let everyone else short the bottom of the candle that are fear missing out. They're FOMOing. They're so upset that they missed this move. And when they get squeezed out, that's when I'm going to find my entry off like this prior support right here. Okay, so you can imagine this playing out. Support, impulse down through. You can imagine me talking about this. People short this. We squeeze up. This is your retest of resistance. Breaks down, and that's when you go take that liquidity. Okay, so hopefully this video has been insightful into sort of my techniques here. I think that's mostly it for ES. We swept liquidity, and I think we should be, you sweep liquidity, you go to demand, or you go to liquidity, and that's sort of taking place right now. I'm a little disappointed that this morning's CPI didn't sweep this level or this level, so it's hard for me to be super bearish just yet. But again, we really just have to play it, level to level here. If we break down into here, we look to see what type of response we get here. If it starts breaking down further, we could utilize an entry technique. Again, go to like a learn a simple trade setup video or something from my link tree. That can help you. Yeah, that's about it, guys. Thank you very much, and I hope you have a great week. We'll talk soon.